Amber Enterprises, Lakshmi Organic, Cupid and ONGC on the back of positive news flow. Zydus Life is the only stock on the radar today that could perhaps open in the red, and we'll tell you why in just a minute.
Okay, we'll get to the stocks with our team in a bit from now. Ed Yardeni, president at Yardeni Research, is now joining us to take some questions. Ed, good to have you with us here. Good morning. Season's greetings from all of us here, and it's good to see you as always. Ed, the S&P is now, as we wrap up 2023, back at Jan 2022 levels. I mean, basically at a fresh high.
Correct.
What that's the global benchmark in that sense. I mean, the largest equity index. What's your sense? I mean, if S&P were to break out into a new high, are we looking at much higher levels into 24? Because there's a technical aspect as well, and there is, yeah, go on.
Yeah, I'm optimistic. I think since October of last year, and again October of this year, investors have come to realize that the U.S. isn't going to go into a recession. And I don't think we're going to go into recession in 2024. I think earnings are going to continue to rebound from a very minor earnings recession we had last year. And I think that as a result of that, I could see the S&P 500 going up to 5,400 by the end of this coming year, 2024. And I think it can go to 6,000 by 2025. The economy has been very resilient. It's had what I call rolling recessions that have been self-correcting. Now we're seeing some rolling recoveries in places like housing and retailing. But overall, the consumer continues to spend. The job market remains very tight. There's plenty of job opportunities out there. So I think the economy continues to grow and the market's going to go to new highs.
Ed, morning. So no recession for the U.S. economy in 2024, and the S&P 500 can rally to levels of 5,400. That's a good 13-14% upside from current levels. What about crude? Any signs that crude may have bottomed out? The latest Red Sea disruptions have resulted in a rise in crude prices. With U.S. economy showing far more resilience, is there a possibility that crude prices could inch up from current levels? What's the outlook for 2024?
Well, I think one of the reasons that we've avoided a recession in the U.S. is that we didn't need a recession to bring inflation down, not in this country. China's had a very significant recession, particularly in its property market, and China remains very depressed. Everybody's been waiting, looking for a recession in the U.S. I think there is a recession right now in China that continues into 2024, and China's been exporting deflation to the rest of the world, which is why inflation is coming down so rapidly. So on the one hand, we have the U.S. economic outlook looking quite good. On the other hand, China, I think, remains depressed. So I don't worry too much about crude oil going up to 100, but could it go up to 95, 90? 90, 95, I should say. It could go in that range.
Mr. Yardeni, season's greetings to you. Good morning. So, the scenario that you presented for the U.S. economy, where we're not expecting a recession, maybe just mild earnings cuts and a recovery. Now, does that factor in a lot of rate cuts from the Fed? Or will that be the scenario in any case? And therefore, maybe the Fed doesn't cut too much. And then could that present any complexity for financial markets? Because financial markets are rallying, expecting these 3 rate cuts next year.
Well, I think there still is sort of a lingering expectations that the economy will finally weaken, that there are long and variable lags between the tight monetary policy we've had since March of last year, and that these lags are going to hit the economy in 2024. And so there is sort of a consensus view out there in the markets that we'll get at least 4 rate cuts by the Fed at 25 basis points each next year. I say 2 rate cuts. I don't think that there's any particular reason why the Fed has to be too aggressive in lowering interest rates. I think the economy is resilient. I think the Fed has tightened, but I think the Fed has also normalized. Interest rates are back to normal. They're kind of back to where they were before the great financial crisis, through the great virus crisis, which was really the abnormal period.
Got it. Ed, we'll leave it there. Thank you very much for joining us. It's a pleasure having you with us here on CNBC-TV18, and wishing you all the best as we sort of look into 2024 as well. we'll take a very quick commercial break here. We'll come back. Our list of stocks to watch out for. We're lined up with our research team. So that's coming up in just a bit from now.